It's about that time of day again. Boy, that time flies when you're having fun. My name is Joseph. It's Monday already, Monday evening, May the 15th, 2017. Welcome back to your nightly newsletter. Hope you guys had a great weekend out there. Welcome back to the party. We're covering crude oil, S&P, gold, euro, and of course we can't forget about the FDAX tonight. Crude is bearish after a recent two-try rule sent prices collapsing lower. But we don't want to chase this move lower after a trend reversal, so we're watching the battle zone for selling opportunities on Tuesday. S&P is bullish with a spike in range tonight, telling us to look for buying opportunities back below the low of the range. And don't forget about the old fake-out breakout pullback to new highs tomorrow. S&P trying to retest today's highs. Gold is bearish, but we have a recent trend change and a major support level. Both of those clues telling us to look for two-legged corrections so we can sell high tomorrow. And of course, the euro is bullish with a big flag pattern telling us to stay patient for a deep correction off the highs with a target going back up to the round number on Tuesday. DAX is bullish with a spike in channel tonight telling us the most reliable buying opportunities will come after a two-legged pullback into the battle zone tomorrow. We're waiting for that deep correction in the FDAX to buy more tomorrow. Got a great newsletter in store for you guys and gals tonight. We get a big third week of the month of May just right around the corner. Hope you guys had a great weekend. Let's not waste any time though. Let's get back at it here. Before we jump into our charts tonight, I do want to remind you the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Dig into the description, grab that link, come join me here on the blog at Sideways Markets for the full-length version and all 5 markets and all the analysis. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social, lower left-hand corner, many different ways to follow me on social media throughout the week. I'm always posting important charts and updates throughout the day there. Grab those charts. Don't forget to have those charts on your computer for tomorrow. Right where it says click here to download today's charts. That way you'll have them ready for your trading session tomorrow. And then please don't forget to grab your free pass in the upper right hand corner. Grab that free pass. You'll learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. And if you're brand new here to the SOT community, right, don't forget that frequently asked questions page on the right-hand side, and I'm always here to help you guys out if you have any questions along the way. Boy, oh boy, what a great Mother's Day weekend. If you're a mom, or if you have a mom, hope you guys had a great Mother's Day out there. We got some work to do now, though. Let's get ready here for tomorrow. Tomorrow's Tuesday, May the 16th. We have no major news on the calendar here for tonight, so nothing to worry about in the overnight Asian session. And as you can see tomorrow, we get kind of a peppering here, starting up at 4 a.m., 4:30, 4:30, 5 a.m. in the London session. So be aware we get quite a bit of a peppering of economic news tomorrow morning if you're going to be out there in the early overnight, or should I say London session, the beginning of the session tomorrow, right, 4 o'clock, 4:30, and 5 a.m. If you're joining me in the trade room tomorrow, we open up at 8 o'clock Eastern time for the U.S. session. We got our housing starts at 8:30, and of course the industrial production number, always 2 very big numbers here. Going to get a lot of housing here this week, right, as we work our way right into the end of the third week of this month. So be aware of that, 8:30 and 9:15 tomorrow if you're with me in the trade room tomorrow morning. And again, don't forget, we'll talk about the plan tonight. We're going to execute this plan tomorrow with all of our advanced members in our trade room. I look forward to seeing you there with us. Let's roll those sleeves up and let's get this party rolling forward here. Starting out tonight on crude, we'll go crude, S&P, gold, euro, and FDAX tonight. Crude is bearish after news from OPEC failed to keep prices racing higher this morning. The buyers tried twice to retest today's high, and with this recent failure, we know the trend has now changed, which tells us to look for the selling opportunities using a two-legged correction off these lows and a target at that measured move tomorrow. Now, most of the time, whenever we hear from OPEC, today we heard about a 9-month production cut, even got Russia involved in this production cut. Russia, of course, not member of the OPEC nations, right? But they came on board this time around. And so we hear this morning, right, an announcement of a 9-month production cut, right? Puts us into 2018. Now, whenever we hear news like this from OPEC, we usually spend a few days running around like a toddler on a sugar rush, right? We usually spend a few days running higher, and then we usually find our way back to where everything began. Now, look what's happening here tonight. This time around, at least for now, it looks like today's announcement is having a much lesser impact than OPEC most likely wanted. Now, we're still only about 12, 18 hours after the announcement, so we may be back at the highs tomorrow. But the sellers, right? The sellers are in control right now. This is clearly not the result that OPEC was looking for, right? Not just a $2 move higher. They got a pretty good jump out of it, but as you can see, it looks like buyers just weren't quite buying this bill of goods. Now the sellers are targeting a move all the way back down to the beginning of that spike in channel, while the bulls would love to go back up and retest that high. There are ultimately two big clues on this chart. The first big clue that you see, obviously, is this big news that came out, right? Big news comes out, and we talked about this today in the trade room. Anytime we see a news breakout, we can usually take that number because you're probably not going to see a pullback to the moving average, which will qualify it as a measured move, right? Usually that big spike up will be doubled up, right, into that double up. So that's exactly what happened, right? They got their double up. Now, typically, when we have a strong roaring market like this, usually we get a major objective like a double up or a measured move, and that's the pit stop. We usually go back up and test it again. In fact, most of the time we see once, if not twice, right, opportunities here to buy low. So as you can see, the buyers, right, got a nice deep pullback below the moving average, and nothing, right? Nothing, right? They're running on nothing there. Nobody's taking that bait. Nobody's trying to buy at that pullback. There's the first try, right? So you get the first try, and then of course it pulls back again. Right, pulls back below a prior swing. Surely this one's going to go retest that high. And as you can see, it did anything but retest that high. So again, strong move up to a double up. We knew the double up was likely going to be our objective here whenever we have, right, news like this. But then what was really amazing, this of course being the second big clue, right, is the two-try rule. Once, twice. The fact that even after we dug into those, right, into that prior swing, they still, you can see the buyers were interested. You can see they gave it the old heave-ho, right, to buy low and get it back up to retest that high. But as you can see, though, they are struggling. And once it rolled over again, you could almost feel the market go, ugh, right? It kind of gave up on itself. Now, again, I'm not going to say that we won't come in tomorrow, right, and this price be right back up to that high. But what I will say right now is after that two-try rule, the bears now take control. It's up to the buyers to take this back. Now, we're going to see an example of this. I believe it's on gold tonight, so we'll talk more about this. But whenever we have a change in trend direction, the very first thing I think of is it's oversold in this case, right? Bullish to bearish. So we don't want to go selling down here because relatively speaking, it's considered to be a real low price on the chart. And this is pretty consistent. Whenever we have a trend change, start thinking about that two-legged correction, in this case, correction, not pullback, right? Two-legged retracement, two-legged correction. Maybe we see a bit of a trend line there off those lows, right, and back down. But the bottom line is we start thinking about, okay, the bears have control, but they just got control. Now we want to sell high. And there'll be a lot of sellers waiting up in that battle zone trying to sell high tomorrow. So a couple scenarios we're watching. Of course, we're watching that battle zone, the battle zone being really the difference between a major reversal line at 02, right, and that swing high at 29. Here are a couple scenarios. Think about the one that's most common is going to be a nice two-legged move. That two-legged move will usually incorporate some trend line in there, right, up to an area of resistance, and then we'll see it come crashing back down. That's one of them. Next opportunity here will be possibly a little trap high, right, above that prior swing, trap high and back down. That would obviously be the most aggressive. And then don't forget about the failure, right? Failures are always very, very, very common in trending markets, right? Price goes above the moving average, pulls back. The buyers try to hold the pullback, but they fail, right, and price collapses back down below. Now, I understand I'm going over a lot of new terminology for you. Don't forget, we cover all this in the beginner, intermediate, and advanced classes. So if you want to learn more about two-legged corrections and trap highs, right, and failures, not to worry. Go right over to the website at schooloftrade.com, join the trial, right, and then learn more about the beginner, intermediate, and advanced levels membership. You can always call me in the office too. I'm always here to answer all your questions as well. So we want to sell high right now, right, because we can see that measured move is waiting below. Now, what if price doesn't go higher? What if it goes lower here? If it still goes lower, we have the measured move we're waiting for. That measured move is likely to be a short-term market objective, and then we pretty much do the same thing again. So even if the market keeps going lower, you're still going to have sellers waiting up there in the wings, waiting to sell high, right? So even if it goes lower, right? Two-legged correction, right? Trap high, right? It's all the same stuff. We just want to find a way to get those bears involved here selling high right now, and we're not going to get it as the price goes lower. So even if the price drops lower, we're still looking at the same type of situation, right? Just lower on the chart. Now, of course, the bears are hunting for that measured move, but let's be honest, what they're really hunting for here tomorrow is the beginning of that spike. This day starts off as a spike and channel, right? When a spike and channel fails, right, it'll end up back to the spike. So that's where the sellers are targeting here right now. This area here between the prior week high and the prior day high. Be careful selling low on this. Basically, we want to get this thing up so we can sell it high. If it goes lower, right, through a measured move, anytime we try to go through a market objective, we then look for that fake out, breakout, pullback, which I'll talk more about. I believe it was, what was it, the euro tonight? We'll talk more about the fake out, breakout, pullback in a moment. Again, but as we go lower, you've got to be thinking suspicious, right? The sellers need to sell high, so don't chase it lower. It doesn't matter how far we go, you're still going to see sellers waiting to sell high right now. So don't take the bait chasing after it. Now, I'd be remiss if I didn't talk about the bull side on this, because obviously here, right, OPEC is dusting things up here right now, trying to get the bulls, right, to find a pulse right now for the bulls right now. How would this market become a bull market? Two things. One, strength. Strong move up. It needs to look like the sellers are not interested in selling high. Two, hold a pullback. That's all they need. It's very, very easy for these buyers to take control. Strong move, get above the moving average strong, right, and then hold a pullback. Okay? Don't just show me a strong move, because a strong move may be seen as a chance to sell. Right? So don't just show me a strong move. Strong move could easily be a short covering rally because we're low here right now. So no strength is not enough. Strong move, hold a pullback, and then get me to a new high, and then we can start talking about, right, this market being back to bullish again. The one obvious objective here right now is to retest that high. So normally what happens is you'll see it strong move up, hold the pullback. This is obviously not drawn to scale here, obviously, right? Strong move up, hold the pullback, becomes bullish. Then when the market turns directions, what do we talk about, right? Two-legged pullback. 1, 2, trap low, and that's your buy, right? It's always that cycle back and forth again, right? When the bulls lose it, the bears take it, it becomes oversold, right? Trap high to sell back down. When the bulls take it and the bears lose it, don't buy it, it's overbought. Trap low, right, to buy low and back up. And again, don't forget, if it does just run, keep an eye on a possible spike and range. Buy the low of that range, right? A possible spike and channel. I would imagine if this thing turns bullish, right, it may get pretty nasty up there. It may really run, right? So watch for a spike in channel, spike in range, spike in wedge, right? Again, all of these terms I'm going over tonight, if you're not familiar with them, right, make sure you join the intermediate class and learn more, right? Educate yourself, because the knowledge is profit, right, when it comes to your trading career. We'll see you guys there, of course, in that intermediate class, and we'll execute this plan tomorrow with all of our advanced members in the trade room, right? So don't do it alone tomorrow. How about some S&P? On the S&P, we're bullish with a spike in range tonight, telling us the most reliable buying opportunities will be at the lows of the range or a fake out, breakout, pullback at the highs, with a target going up, right, to retest, right, that prior week high overhead. The bulls came out the gate roaring higher this morning, but you can see the buyers rejected these higher prices when they failed to retest the high, right? As you can see, the buyers rejecting those higher prices when we failed to retest the high on that first pullback to the moving average. Now the bulls are focused on buying low, with the target going back up to retest today's high. And most likely, if they can get back to that high, we'll probably see it go up and grab that prior week high. A lot of the markets were pushing those prior week highs, and so we assume the S&P, right, will do the same. As you can see here right now, bulls came out the gate real strong move up, right? That gave it away. The buyers were eager to be buying. Of course, first pulled back to the moving average, right? Buyers are in firm control. Now, I see this as being more of a spike than anything else. You can't really draw this as a channel. It doesn't really make much sense here, as a channel. I guess you could look at it as a bull channel with a double overshoot. And of course, that would mean a double overshoot high, overshoot of the low. So you could, I wouldn't argue with you if you said a channel, but it's really not. It comes easy when you practice and you know what you're doing. Speaking of that, don't forget, head over to the website here at schooloftrade.com. You can find a link on that in the description. And don't forget to join our free trial, right? You can learn all about how we trade, what we trade, why we trade, when we trade, cover all the W's, right, inside of that free trial. Make sure you grab the free trial to learn more. And don't forget, we've got a great beginner, intermediate, and advanced packages here at School of Trade, as I call it, the professional trader transformation. I've helped thousands of traders do this the right way over my extensive teaching career, and we help our clients work their way up the ladder every day of the week. Start off as a beginner, graduate as an advanced, come out and join me in the trade room tomorrow, 8 o'clock Eastern Time. I look forward to seeing you there. Don't forget, I'm here to answer questions. Hit me up on live support if you have any questions there. Same time, same place tomorrow. I'll be with you tomorrow morning at 8 o'clock Eastern Time as advanced members. If not, back again tomorrow night for another edition of our nightly newsletter. Great to have you back here once again, by the way. Hope you guys enjoyed the weekend. I'll see you guys again tomorrow. Adios, amigos.